All right, welcome again. Now, today's topic, liquidation process.
Mm,
This is one of the best topic actually, and at the end of this topic, you'll know um, so many things on why price performs high highs and high lows, low highs and lower lows. You'll know why price performs a break above but change the moves instantly, you know, and some questions like that. So it's one of the best topic. I need you to listen very carefully because um, this topic is going to answer a lot of questions later, and some of the entries like liquidity engineering, the zone flip entries are based on this topic of liquidation process. So
mm,
it's a very important topic. Now, before we try to see what is liquidation process and what it's all about, let let us see what is liquidity. Liquidity. I don't know if I pronounced this way. So, what is liquidity? Now, funny thing about liquidity is you can define it any way you want, depending on the field of work you are in. Okay, so if you are a doctor, you will have a certain way of defining your liquidity.
mm,
If you are an engineer, if you are a teacher, if you are a driver, you'll have your own way of defining liquidity. So, with that being said, we have a lot of definitions concerning liquidity. But based on what I have learned and based on my experience, liquidity is simply orders. Okay?
mm.
Liquidity is simply orders. And what are these orders? The orders I'm talking about in trading here is the buy and sell orders. Okay? Just go with me here because I need you to understand step by step. So the orders in trading that we have is only buy and sell orders.
Your screen is off.
My screen is off.
Okay, it's back on. It's back on.
Okay. You can see my screen. You can see my screen, right?
Yeah, I see it.
You think?
No, I see it. I said I see it.
Okay, okay.
It's back on. Mm.
So I said liquidity is simply orders, and the orders we are talking about here is buy and sell orders. Are we together?
Yeah.
Now, these orders are in three forms. We have three forms of orders in trading. So the first form is the limit orders. Okay, that's why we have buy limit, sell limit. Those are orders, those are liquidity. So when you place a buy limit or sell limit, you have to know you are a liquidity.
Okay.
And also we have stop orders. I don't know if you have ever used stop orders.
No, I've never. Maybe I used to use only limit orders.
Yeah, you know, we don't use more often stop orders, but we also have stop orders. Stop orders is where you have a structure. You place your order here, and when price comes, it take your order and goes through
Oh,
your way. So it's like
okay.
the orders in on the way, waiting for your entries. So
Okay.
we have stop orders, we have limit orders, and also we have market execution. Okay, market execution orders,
Mm.
where you press orders instantly. If you place buy, if you the moment you place your buy button, the order is running. So we have three forms of orders in the market, which is limit orders, stop orders, and market execution. So this defines the term liquidity. Are we together? Now, just a moment. Now, liquidation process, the liquidation process starts from the process of the order flow, meaning uh, uh, the order flow, meaning the order flow is just the uh, the environment created for you, a trader, uh, to to simply press the orders. I mean, the environment created that simplify you placing your order or making decisions in the market. So I'm just trying to summarize or to simplify these terms, not to confuse you. Okay, so
Mm.
order
Yeah.
flow is just an environment that the market creates for you to get that simplicity in making decisions in the market.
Okay.
So for an order flow to complete, we need to have a liquidation process happen.
Mm-hmm.
Now, for the liquidation process to happen, there must be a rule that guides a liquidation process happen, and I call it the law of liquidity, or you can say liquidation law. This law states that the market or price, let me use the term market, the market tends to create um, uh, the market tends to create more buyers. I don't know if I use these signs of more than, less than. I don't know if you understand them.
Mm.
Yeah. So the market tends to create more buyers in order to sell, and also it creates more sellers in order to buy.
Bye.
Now understand this. This law appear in every business in the world. Any business that you see, it doesn't matter what you are selling, this law is practical in every business. Why? Because for you to sell your product, you need buyers.
Mm.
For you to buy any product, you need to sell. You need sellers, right?
Mm.
So this law actually appears in every business. So it also appears in our trading sphere, where we cannot see price going all the way up. No, although we have this move in the market where price just goes up, it doesn't go performs any uh, uh, pullback. But in order for the price to go all the way up, it needs sellers, because in this move we see buyers in control, right? But for the price to buy, it needs sellers. How does the market create these scenarios in the chart? It's simple. For the price to buy, in order it needs to create sellers. So it creates more sellers in order to buy. It creates more sellers in order to buy. It creates more sellers again in order to buy. That's why we have highs and lows.
Mm.
So any pullback you see, any retracement you see, it's just price obeying the law of liquidity.
Okay.
So for the price to sell, you need more buyers in order to sell. You need more buyers in order to sell. More buyers creating more buyers in order to sell. So when price create a trend like this, you just have to know price is performing a liquidation process.
Okay.
Now, now, the liquidation process have phases. We have phases of the liquidation process. Phases of the liquidation process. So we have phases. We have three phases of the liquidation process. Number one is accumulation, and mind you, these phases also appears in every business. It doesn't matter the business you are in. If you are uh, selling products, maybe these phases
Mm.
appears in any business. So the first phase is accumulation. Accumulation phase. This is where the market tends to collect or to gather both buyers and sellers together.
Mm.
So when you see price creating a consolidation market structure, you have to know this is an accumulation phase. Why? Because buyers and sellers are gathered together in one place. So you have to know this is an accumulation phase. That's why a consolidation market structure, they also call it accumulation. All right. So
Yeah.
this in this phase just is just a gathering of both buyers and sellers together.
Mm.
Now after gathering both, okay, before I go on, in accumulation, you can find it also in our business, in our day-to-day life, when we have I believe in Uganda you also have markets, okay, where people
Yeah.
go there and shop and do whatever they think they do.
Mm. Yeah.
You have to know those markets are just uh, accumulation phase, where
Mm.
buyers and sellers are gathered in one place. So that is an accumulation phase.
Okay.
Now, in trading also we can see structures like this, but also in terms of high highs and high lows, when we have an invalidation and validation structure, that is also an accumulation phase.
Why?
Okay, I'll get into that later.
Okay.
Okay, when we have an invalidation and validation, this is also an accumulation. Of course, this we're going to learn it later, don't worry. uh, right now just understand the phase of the liquidation process, okay?
Okay.
Okay, now the second phase, after we gather the buyers and trail and sellers together, is pretty simple, which is actually this next phase is actually the process itself, the liquidation process itself, which is the manipulation manipulation phase. Now this is where liquidation process starts.
Mm-hmm.
Manipulation is actually an action of the law of liquidity, meaning the point where price starts creating more buyers in order to sell, or creating more sellers in order to buy. That is where manipulation starts. So
Okay.
you remember in the candlestick anatomy, I said, for example, this if this is the buy candle, I said the buy candles always open below, and I said this wick below is a manipulation wick. Do you remember that?
Yeah.
So, meaning manipulation is just an act of creating more sellers in order to buy, or more buyers in order to sell. So for a candle to print bullish, it needs sellers in order for the candle to buy. So that's why this wick below is performing the liquidation process by creating more sellers first in order to
Then it
buy.
buys.
I don't know if you understand this.
Yeah, I'm understanding.
So you can see uh, the theory behind candlesticks. Why do they print bullish or bearish, and they print these wicks below?
Yeah.
So that's why I call it this wick a manipulation wick. Why? Because this performs an act of creating more sellers first, to gather more sellers in order for me or the market to buy.
Okay.
So you may find also in accumulation phases like this, in ranging markets like this, you may find price creating a break like this, and price goes the other way, and then you're wondering why, what happened. We were supposed to sell, but price went up. It's simply that break there was a manipulation phase. it created more sellers first, and then the price went up.
Mm.
So manipulation is where this liquidation process starts. And I'm gonna show you in the chart and some of the examples in on PDF. You see what I mean.
Okay.
And the last phase, after you manipulate, if you are a seller and you have your products, you need to sell them, meaning you will manipulate the buyers. How are you going to manipulate? You're going to promote ads. You're going to display your clothes. If you are selling clothes, you are going to display your clothes in on social medias and all that stuff. That is an action of you manipulating the buyers, creating more buyers for you, for the buyers to come and buy your products, for you to sell more products. That is an act of manipulate. So after manipulating, you have your buyers. The next phase is distribution. You need now to distribute your product. So in trading, after the market creates an accumulation and then we manipulate it, we need also to distribute. Now, distribution is where now we see the one supposed to control the market at that time, if it is sellers or buyers. So after manipulating the sellers, meaning the next move will determine the one controlling the market.
Okay.
So distribution now is where the true trend is, the true move is. So this very thing here is a full strategy for some other people. They use this as the main strategy. They actually
Okay.
trade by using this phase of liquidation. It's very simple. Actually, I don't know if I told you this. If you go to the YouTube channel and you type or you search AMD trading strategy, you'll get this one. If you type the power of three, trading strategy,
So,
you'll get this this very information. So it is actually a trading strategy to some of the people. But why did I put this as one of the topic in the market structure? Because we learned structure verification, we learned time frames and some other topics, but we need to understand why the price moves in the way that it creates ups and down and creating fake outs when we have a clean break but price goes the other way. We need to understand the the secret behind. The secret behind is simply price is performing liquidation. And actually, um, this phase of, this liquidation process is actually the is the way these big banks, big institutions, this is the method they use to trade. So this is one of the secret why we get, big moves like this. And in the market moves like this, and we feel like, okay, why is the price making these big moves? The secret here is
Okay.
whenever you see a big move in the market, any big move, you have to know that there was a manipulation somewhere. Now
Okay.
the act here, the issue here is for you to know where manipulation starts so that you can catch the distribution move.
Okay.
Simple like that. Now I want to show you something